that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hope everyone had a fantastic weekend. It's Chuck, Mike, and Tucker with you here on the Financial Exchange, and busiest week of the year by far. I know it's only been, 4.5 weeks now, but this is just a jammed week. I don't know that it's necessarily the most pivotal one of the year because I don't think there's anything that pivotal in here, but golly gee willikers, just a whole lot of information coming out this week. Let's start first on the economic data side of things.
Okay.
We got a bunch on that side. We've got tomorrow, JOLTS, the Job Openings and Labor Turnover Survey report. That comes out at 10 a.m.
If you've heard that statistic about how many people looking for work compared to jobs opening, that 2-to-1 ratio that we were talking about in summer of 22?
Yeah.
That's when it kind of peaked out here. That's where we get that data point from.
We also have the Case-Shiller Home Price Index at 9 a.m., the FHFA Home Price Index at 9 a.m. We have the Conference Board Consumer Confidence Index coming out at 10 a.m. So that's just tomorrow for economic data. Then we get to Wednesday. Wednesday we got weekly mortgage information, how many new mortgages, blah, blah, blah. We got ADP employment. We've got the Chicago Fed PMI. We've got the broader Fed making a Fed meeting. They've got an interest rate decision to make at 2 p.m., and then Jay Powell's giving a press conference at 2:30, so that's obviously a whole dog and pony show. I don't know why anyone would go to a dog and pony show. What?
That'd be exciting. Come on.
I know of dog shows, but pony shows?
I've never been to one that combines both.
Yeah.
I've never been to a dog show or a pony show either, but if I had my preference, I'd rather go to a dog show.
Combinations. I like that. It reminds me of my long-term business idea, which I've told you about, Chuck. You're familiar with this one.
Steak and Shake?
No.
Oh, that's already taken.
No. Taxes and taxidermy. All your tax needs in one place.
Are you going to call it Mike's Stuff?
Maybe.
I think that'd be good.
Yep.
We've got on Thursday jobless claims. We also then have productivity and unit labor costs coming out. We got the ISM manufacturing PMI, so more data there. And then Friday we get the jobs report. So every day you got some pretty big stuff coming out.
That in of itself is a somewhat abnormally busy week for economic data. I mean, just in terms of scale of reports, right? We've got the jobs report, which we look at every month. We've got a Fed meeting and the JOLTS. Like that's a lot in 1 week. Combine that with
Earnings.
The single busiest week of earnings for this quarter, including the largest companies in the world. So let's start off tomorrow. Microsoft, Google, AMD, Starbucks, all reporting after the bell. Pfizer, UPS, both reporting tomorrow morning before the bell. Wednesday.
Don't forget, you didn't even mention Starbucks. General Motors also on the same day.
I think I got Starbucks. I didn't get General Motors.
Okay.
Because got to scroll way down now for market cap of General Motors. But
sorry to hear that.
Yeah, we've got all of them. Wednesday, MasterCard, Novo Nordisk, Novartis, Thermo Fisher, Boeing. Wednesday morning, big one for them. Well, kind of know what they're going to say.
No, the manufacturing still sucks.
Yeah, we'll be covering some more of that later today. Thursday, just a small couple companies named Apple, Amazon, and Meta, formerly known as Facebook, all reporting after the bell on Thursday. Quite honestly, there's a few dozen more that I haven't listed.
Meta's not until next week. Meta's next Wednesday.
No, Meta's the first Thursday.
I've got Meta on the 7th.
I've got Meta on the 1st, so let's check our sources. I'm looking at NASDAQ.
Yeah, me too.
Interesting.
Yeah. So we will either be having Meta on Thursday of this week, if my source is correct, or Thursday of next week, if Chuck's source is correct.
All right, put it on the board, Tucker. Anyways, so just a whole bunch to get to this week. I think ultimately when we look at where we stand so far, and this is not something where we're through any meaningful portion of the earnings season, but it's always good just to check up on where you are. So we've got 25% of the S&P 500 companies that have reported so far. And again, from a market cap perspective, it's eensy-weensy. It's less of that. 69% of those companies have reported a positive surprise, so they've beaten expectations, which is pretty much in line with historical norms. But what we are seeing right now is that for Q4 2023 thus far, the blended earnings decline is 1.4% year over year for the quarter. If we look at the expectations, we were expecting to see, let's see, where did that go? I had it here somewhere. I'll pull it up, but we were expecting to see, I believe, better than that. We were not expecting an earnings decline, but
For
again,
those companies or for the S&P?
for the S&P.
Yeah, I think
you never have it on a company-by-company basis,
Yeah.
so who cares?
So year over year, I think we were expecting somewhere in the 2% earnings growth range for
Yeah,
full
but I'm
year
looking quarter over.
2023.
Like, it's where the heck is it? Who cares? I don't really know. It's garbage anyways. Let's talk about Boeing, just because this is really grinding my. I'm sorry, I freaking hate these guys right now. Like,
Yeah.
I just am so upset about this because the Wall Street Journal, confirming the Seattle Times report from last Friday that we covered, that Boeing basically didn't put these door bolts back on the door that's supposed to be bolted shut. You know, when you're flying a plane at 30,000 feet, it's good to have the fake door bolted shut so it doesn't fly off and suck all the people out.
Yep.
Good thing it fell off at
Pretty-
15,000 feet instead of 30,000 because it would have been way worse at 30,000. And Boeing also, this I'll quote from the report here, they also pointed to paperwork and process lapses at Boeing's Renton, Washington factory related to the company's work on the plug door. The NTSB has been conducting metallurgical analysis of the plug door but hasn't released the results of testing. Laboratory tests may show whether the bolts were in place there or not at all. An update in the NTSB probe is expected as soon as this week. So we're probably going to hear something from the NTSB shortly here. But so I'm very upset with Boeing, right? But I'm also starting to get a little bit upset with the U.S. government on this as well.
FAA and
No. Congress. Mike, do you know who it's either the second or third largest defense contractor in the country is in terms of dollar volume?
Boeing?
It's Boeing.
Yeah, sure.
They get all this money from the U.S. government to make military planes. If I am a U.S. senator or a U.S. congressperson, I am dragging every person at that company in to meet with me, not so I can grandstand with them, but so I can say, if you guys don't get this together, you are losing these contracts. Because that's something that Congress can very well control. And they should. Because this is a company that was the crown jewel of like the world aviation space in the 20th century. And they've become hot garbage, quite honestly. And Congress can actually control this by saying, hey, you know what? You got to get rid of these board members. You got to get rid of your C-suite. We're not tolerating this anymore. You don't do that, we're not signing these contracts.
Here's where here is my only counterpoint, which is, quite frankly, I would love to see that happen. Congress over the last 50 years has painted themselves into the corner of having almost no real competition in our military-industrial complex.
It's fine.
So who is going to make the whatever it is that Boeing does for
There's someone out
US
there that'll take a
military?
shot at it.
Yeah.
Okay, you can't do it on existing plane. Look, you're not going to get.
I hear you.
Boeing's still going to make the F-18 because they're the only people that do. But hey, we've got an RFP out for the chopper that's going to replace the Black Hawk right now.
Right.
Okay, Boeing, you want to even be competing for that Black Hawk replacement? Get rid of all your C-suite executives, get rid of all your board members, and actually get your act together. Because we're not going to give you billions of dollars to make crap.
That blows.
I'm so upset about this because it's just it's a cultural rot there. It keeps being one thing after another. The FAA literally has babysitters sitting at Boeing right now, watching them screw stuff into the planes because they can't be trusted with a screwdriver.
It does bring up an interesting, a question that I had after the last series of accidents with the 737 MAX 8.
Whatever one it was.
I don't recall. But at the end of that, I actually said, you know what? This is going to be the safest plane on the planet Earth because they cannot possibly screw this up again or they will have destroyed confidence in their capabilities.
Did you see United today?
Yeah.
United said, hey, look, we're shopping around. We're not going to use the 737 MAX 10 most likely. We're looking for ways to get Airbus planes into that rotation because we don't trust Boeing.
Quite frankly, I don't actually think that this has gone this far because, look, you're an aviation enthusiast. We talk about this stuff every day. I don't think it's quite in the American psyche in the same way that it might be in yours and mine. But everyone should be questioning whether or not they feel comfortable flying on one of these planes right now because, look, not because a bunch of people died when the door busted off, but because the door busted off at a time when Boeing is under a microscope by every regulator, by every customer, by every airline out there, and they still managed to let this failure happen.
Boeing's
so what
lucky
else is
that
happening?
no one died. There are two
luck.
reasons why. The first, there was no one sitting in the seat directly next to the door.
Yep.
It was an empty seat, and even with that, the person in the middle seat almost got sucked out of the plane. And B, it happened at 15,000 feet instead of at 34. This happens at 34,000 feet where the pressure's that much lower. You don't know. You have no idea if you've got fatalities as a result of that.
Right.
And Boeing's just trying to like play this off like, oh no, like we're. The worst part, they're like, oh, we're so sorry that we're disappointing like our valued customers, you know, and we're going to try to work with our customers to make sure that we can get them the planes they need when they need them. How about apologizing to the people that flew on them? Like, how about apologizing to them?
There's nothing that they can say right now that's going to... There's no right answer to any of this. The only right answer is resignation. Like, you had one job, which was to improve the safety of these planes, and you failed to do so.
So
you shouldn't have maybe survived the first incident. You definitely can't survive the second time your planes go through safety issues.
I mean, do you think there's a chance ahead of their earnings on Wednesday that there is an announcement?
No.
I don't think they have any shame. And the worst part is it's not even like the stock's doing well. I don't know what the board, I don't know what large investors are looking at with this company. I mean, let's say that I am a large institutional investor looking at Boeing, and I say, gee, you know, I'm one of these, you know, activist investors. I'm Bill Ackman, or I'm who's the guy that hates Ackman?
His arch nemesis, I forget.
Whatever. It's oh, I'm totally blanking on it. I'm one of those guys. Okay, that's me.
Icon.
Carl Icahn, yes. The stock right now is at the same place it was 4 years ago. So I'm holding a bunch of this if I'm one of these guys, and I'm saying, you haven't done anything for me. Beyond even being at the same place it was at, 4 years ago, it's at the same place it was in July of 2017. So it's been 7 years and your stock hasn't gone anywhere. There's no dividend because they had to cut it because they've got all kinds of problems getting planes out the door, and so they can't have, the free cash flow issue of sending, dividends out. I don't know. If I'm a large institutional investor, how am I not pressuring every board member to resign and getting a new CEO in there when my investment hasn't gone anywhere in 7 years? Be one thing if the stock was going gangbusters.
Sure.
People, for better or for worse, people turn a blind eye to this stuff all the time in the name of money. But there's not even any money here right now. Let's take a quick break. When we come back, let's talk about the Fed when we return.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All of us at the Financial Exchange are truly thankful for our partnership with the Disabled American Veterans Department of Massachusetts. You can help our great American heroes too by making a donation today. Your gifts can support the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Piece in the Wall Street Journal today by Nick Timmeros, who is their Fed reporter and pretty much the trial balloon flotation assistant person for Jerome Powell. That's the official title, the trial balloon flotation assistant person.
Yeah. He's got a, pretty clearly from his reporting over the past few years, you know that he's got a fairly close connection to people at the Federal Reserve because a lot of his reporting has been...
What Jay Powell wants you to think going into a meeting, Nick Timmeros publishes.
Yeah, let's
which
go
is
with
it's a valuable service because
Yeah,
you can know what the Fed is thinking in advance. The thing is, you just need to understand that when you're reading Nick's pieces, is that he's telling you what the Fed wants you to think. He's not telling you objectively about the situation. It's the Fed's preferred view, which is fine. Like I enjoy being able to get an early look at what they're talking about. So here's the headline. Plummeting inflation raises new risk for Fed, rising real interest rates. So let's talk about what real interest rates are. They are interest rates minus inflation. So as an example, if you were to go back 2 years where inflation is running at 9% and the Fed funds rate is at 1%, the real interest rate there was -8.
Meaning stimulative, hypothetically.
Very
to the
stimulative.
economy.
Negative real interest rates are very stimulative.
Thinking about that logically for a moment here, companies can raise their prices or are raising their prices as part of this inflationary proposition. They're growing their profits. They're able to borrow money for less than the increase,
less than the
lower
cost of
interest rate than
inflation.
the cost of inflation, and so therefore you can imagine how this would be stimulative, right? If Procter & Gamble can go borrow money at 3% when they're getting in 10% price hikes every year, that is a good news story for Procter & Gamble.
Today, you get the Fed funds rate at 5.5%, and inflation on the CPI is running 3-ish, and on the PCE is running 2.6. That means that real interest rates now are, 2 to 2.5% in that ballpark. Why does this matter? So there's a school of thought that real interest rates are what actually function as, being restrictive or not on the economy. And so if you have inflation falling even while maintaining rates where they are, if you look at, how the theory reads, you're actually tightening monetary policy because real interest rates are increasing even though you're just keeping rates where they are. So the thought is, hey, if inflation is meaningfully falling and if it's, down at a lower level for a little bit now, the Fed is going to want to chase interest rates down to make sure that they are not restricting the economy at a time when they're not trying to.
Which is not anything completely new. Like, this was alluded to towards the end of last year, is, look, we don't want to be the same. We don't need to have the same level of high interest rates if inflation is truly defeated, which, again, logically does make sense, and you don't want to keep rates too high for too long because it can lead to different types of crises.
Now, there are all kinds of lags here, and the counterpoint on this is, look, you're not really seeing any signs of recession in the economy right now. The economy is actually accelerating again after a slowdown late in Q3, early in Q4. And so, hey, why are you talking about cutting rates if growth looks fine? Do you really need to do this? The counter that the Fed would say is, yeah, growth looks fine now, but we want to keep it fine. We don't want our higher rates to become a cause for a recession later this year. If inflation is in the 2 to 3% range, why are we maintaining restrictive policy? We're not as concerned about, inflation rebounding right now. On the other hand, I look at this and I say, hey, that is what I'm more concerned about because you haven't truly vanquished it yet. It's only been down for a little bit. This is what the Fed's going to be navigating this year is, when's the time to start cutting rates, and what's the pace at which we do that? And this is laying out that they may be more dovish than a lot of people think.
Pretty soon.
Quick break here. When we come back, we got Wall Street Watch, and then we're talking Evergrande.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. communities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled, Can You Afford to Snowbird? Mike, people think about the big expenses when they're trying to figure out if they can rent or buy a place down south, but what about the smaller ones they need to account for as well that tend to add up?
Yeah, I mean, certainly when I'm thinking about buying a home down in Florida as the typical Northeastern experience, if you're talking about snowbirding, you're aware of the purchase price. You know you're going to have property taxes, but the other items do sneak up on you. We've been talking a lot about how insurance market in Florida has gotten a little bit crazy. Those costs get substantial very, very quickly. But other things as well, right? Just because you're not there doesn't necessarily mean you can cut out your entire internet connection or cable bill, or the fees for trash pickup might be built into the association that you belong to. And so really adding up all of these different factors is important if you're going to make a permanent shift like this of maintaining two properties.
And other things you have to factor in as well are travel to and from, and even travel while you're down there. Will you bring a car down there? Are you going to be buying a new one for that new location?
Right. Prepare to pay thousands of dollars each way if you plan on shipping your car back and forth, which honestly can be more affordable than owning two cars with the insurances and everything else that goes along with it, but you have to beware.
Our guide this month is titled, Can You Afford to Snowbird? And there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, traders are turning the page on a winning week and look ahead to this week's busy week, including a Fed meeting, major tech earnings, and a jobs report on Friday. Right now, markets are pretty quiet. The Dow is off by 28 points, S&P 500 down by 2 points, and the NASDAQ is up by 8 points. Russell 2000 is up by 3 points. 10-year Treasury yield down by 4 basis points at 4.11%, and crude oil down 1 2/3%, trading at $76.73 a barrel. Amazon and iRobot have come to a mutual agreement to terminate their previously announced $1.4 billion acquisition after European regulators threatened to veto the deal. In a joint press release, the companies said that there was, quote, no path to regulatory approval of the deal. With that, the Massachusetts-based Roomba maker said it would lay off 31% of its employees, or about 350 people, and its chair and CEO, Colin Angle, would step down effective immediately. iRobot shares are down by 11%, while Amazon stock is up by about 0.25%. Meanwhile, SoFi Technology shares are up 22%, after the online financial lender posted a quarterly profit as its revenue jumped 35% to $615 million, with the company also witnessed more than 500,000 new members. SoFi said it expects a profit of between $10 to $20 million in the current quarter, and also laid out expectations for 20 to 25% compound revenue growth through 2026. Elsewhere, JP Morgan upgraded discount retailer Dollar Tree to overweight from neutral, noting higher profitability and a larger total addressable market as potential tailwinds. Dollar Tree stock is up by 1%. And in terms of tech earnings this week, we mentioned it earlier, Tuesday after the closing bell, we'll see Microsoft, Alphabet, and AMD report. And on Thursday after the closing bell, the likes of Apple, Amazon, and Meta will all post their quarterly results. I'm Tucker Silva, and that's Wall Street Watch.
Mike, we got a name here that is a blast from the recent past. Evergrande, also affectionately known as Evergrande. They are now set for liquidation after a Hong Kong court said, yeah, make yourselves liquid, guys.
Yeah, I don't know if they're going to make themselves liquid, but yeah, effectively saying you've asked for enough time on this. You don't have any more lifelines to be thrown. Time's up. Throw in the towel and let's be done here. This is going to be amazingly complex, I think is just a safe starting point here. So first off, this is a court in Hong Kong that asked them or told them to liquidate now. The court in Hong Kong seems to have limited authority over Evergrande's liabilities and operations in mainland China.
Yes.
Where the majority of their operations are.
Pretty much all of them.
Yeah. So that piece in and of itself is confusing, right? Could there be a court ruling in mainland China that contradicts that? Furthermore, is this Bloomberg here? Yeah, Bloomberg points out any court-appointed liquidator is likely to face a tricky process. This is quoting directly from Bloomberg. Most Evergrande projects are operated by local units, which could be hard for offshore liquidators to seize. More than 90% of the company's assets are located in mainland China, according to a court filing. So what does this mean? It probably does not mean that there's going to be fire sales on Evergrande apartments that are going up for liquidation across mainland China overnight. Rather, that there are some debt holders that are going to be using the bankruptcy process for what they do with their bonds and loans to Evergrande.
And the big thing is when we talk about the scale of this liquidation and the restructuring that was needed, Evergrande had more than $300 billion of liabilities at its peak.
Yep.
The stock right now was trading at $275 million, so almost worthless. The bonds are trading at 2 cents on the dollar, so there's
also almost worthless.
There's not really an expectation from anyone that that they're going to be getting much from this company. So it's at least that seems reasonable. But you try to put this in perspective and say, okay, $300 billion in liabilities. Like, what does that mean? Boeing, just as an example, has about $151 billion in liabilities. So it's 2 times that size. ExxonMobil, who we're all familiar with because, well, they're ExxonMobil, $164 billion in liabilities. Apple, one of the biggest companies on the planet, $290 billion in liabilities. Pull out another one. Like, even talk about, like, your large utilities, like your Southern Company or someone like that. Southern Company, $103 billion in liabilities. Big real estate companies, who we have that's publicly traded in the U.S., who are the big like Equity Residential?
Yeah.
Let's look at them. Equity Residential. $8.5 billion in liabilities. Toll Brothers, if you want to go that route. $5.7 billion in liabilities. This is a company where the amount of debt that they are talking about is equivalent to Apple.
Yeah, it dwarfs mainstream American companies.
You don't see stuff like this. And this is also the challenge in trying to interpret what's going on in China from a debt perspective, is that you have companies that are very closely tied in with, the Chinese Communist Party, state-owned enterprises, this whole ecosystem. And debt just kind of gets shoveled down from the top, where it's like the Chinese government takes it out, but then it ends up in provincial governments, and then it ends up on these local companies. You don't really know how bad it actually is because it just gets shoveled down is the best way that I can describe it. It's the opposite of what happens in the U.S. The U.S., when things go wrong, debt goes up. It eventually ends up being part of like the federal deficit. That's been the trend over the last couple decades in particular.
Yeah. So
China, it's the opposite. China's like, no, pretend that this doesn't exist. Like, send it down to like a province. Send it down to, Jim's construction company.
So we can always blame it on the CEO of Evergrande. The problem is when it's large enough to the scale that it completely disrupts your entire like one thing when one provincial governor or one CEO gets put out to pasture because the party wrote some bad loans. But when the size of the debt and the collapse of the real estate market challenges the overall narrative around real estate development in China, which is what's happening right now, you can't just put a CEO out to pasture and fix the problem.
No. Let's talk a little bit about oil. Over the weekend, I think it was yesterday, maybe it was Saturday, I don't know, the weekend kind of blurs together at this point.
I believe it was yesterday.
We received the very sad news that 3 U.S. service members stationed in Jordan were killed by a drone strike from an Iranian-backed militia. I believe 34 service members have also been reported injured in that as well. Naturally, when you start thinking about the economic impact of that, the first thing that you think is, okay, like things getting hotter in the Middle East, probably not great for, keeping gas prices low. And then you take a look at where oil prices are today, and they're down $1.23 on West Texas Intermediate to $76.81.
So let's just stop and think about this for a minute. I cannot logically explain why oil prices would go down on what we can all consider to be increased risk of escalation between the United States and Iran. I think that's the key thing that the United States has been trying to avoid over the last several years, probably over the last decade. And when stuff like this happens, whether or not it escalates to war with Iran or more direct strikes with Iran, the increased risk is there. And so what are oil markets reading? I don't know, but don't always plan on them being correct. Like, markets are forward-looking. They're not always correct about what they see in the future.
No, the other thing that you do have to pay attention to in the oil market, which, again, I mean, you want to talk about a market that's just hard to get right consistently, it's the oil market. But there's an awful lot of reflexivity in that market, and what I mean by that is, let's say that you have something that escalates in the Middle East and prices go up. This is one of those markets where price increases, you're talking, okay, prices go up, 10, 15%, whatever it is. That has a huge impact on demand then, which subsequently makes this kind of self-correcting and prices tend to come back down usually. I mean, there's a reason why oil prices are not at $400 a barrel is because demand corrects and then production corrects and you end up kind of in a happy medium eventually. But this is something that you have to watch because if there is an escalation in the Middle East, ultimately higher prices don't lead to more demand in perpetuity. You end up with, we see this when we look at, U.S. driving data and things like that. Gas prices go up 10%. Drivers cut their mileage by 5%. And all of a sudden you end up with, okay, great, now we don't need as much oil and prices come down because you're awash with, more oil than you need. And that's what happens. Now, can you end up in a situation where that's not the case? Sure. If you have, a significant escalation that also targets oil infrastructure, yeah, then you start getting into some pretty ugly stuff. But we're not there, and look, we'll see where this goes. The Biden administration has said that they're going to, prepare an appropriate response. We have not yet seen that. Iran is backpedaling about as quickly as they can. Iran's basically like, yeah, we know that, we've supported these guys, but it wasn't us. Like, don't blame us for this. So
Iran must have got the drone from somewhere else.
So Iran, for the first time in, 3 months, finally actually seems nervous that maybe they went too far. And I think it's because they quite honestly did. And so we'll see where this goes. But that's the state of play as it relates to oil prices right now. Let's take a quick break here. When we return, we'll talk a little bit about borrowing in the United States when we come back.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing & Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It's easy to imagine being a snowbird and moving to a warmer climate for a few months each year, but you need to have a sound financial plan in place if it's going to work. Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you're thinking of buying new property in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, let the Armstrong Advisory Group help you build a solid financial strategy that may make your planning easier. Get your free copy of Armstrong's new guide called Can You Afford to Snowbird by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Piece today in the Wall Street Journal, Mike, titled "Businesses and Consumers Are Borrowing Again." What kind of data are we seeing here?
Well, across the board, we are seeing some expansion in both willingness to lend as well as corporations taking a look at the bond market and issuing. One piece of information that I always like to keep an eye on when we talk about lending in general is what we call the junk bond spread. So this is the premium that a below investment grade bond has to pay in interest compared to what is it, against treasuries, I believe. And
yeah.
So the St. Louis Fed puts out a tool here to look at the Bank of America high yield index of option adjusted spread. And so as you can imagine, in times of turmoil, so how about March 25th of 2020, the spread between treasuries and these junk bonds was like 10%. You had to pay a 10% premium to be issuing debt at that point in time, even though your reality was you probably couldn't issue debt at that time. In 2021, when there was just cash everywhere, it was 3%. Today, right now, as of January 26th, we're sitting at a spread of 3.39%. And so I think there's a number of different ways to look at this, but one way is how willing are individuals, institutions to lend money out there. And when this is pretty narrow, it means they're pretty willing to do so.
So you've got that going on. On top of that, you've got all kinds of signs. You've got corporate bond issuance picking up significantly. You've got more refis happening on the primary mortgage, the primary residence side of things. You've even got signs now that banks are starting to say, yeah, we're a little bit more comfortable issuing, new loans than we were in the last couple of years as well. So it's across the board. You're starting to see these different signs.
With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
One more piece on what we were discussing earlier, which is the seeming willingness to lend and businesses and consumers' willingness to borrow or desire to borrow. It is one more indication that I would give to say the Federal Reserve does not really need to lower interest rates right now to spur activity by any stretch of the imagination, right? Activity seems to be picking up even with rates where they are. Now, if I'm going to play devil's advocate, somebody would say, well, this activity is occurring because they assume interest rates are going to come down. And if they don't, it'll snap back in the other direction. But this activity is occurring with rates right where they are. And so what is the justification to say, hey, let's lower rates so that businesses can borrow at 5% instead of 7%?
What a great segue, Michael, to our next story. According to a survey from Bloomberg Markets Live, the rate on the 30-year fixed-rate mortgage is expected to fall to 5.5% by the end of the year, according to the median response from 236 respondents who work in that industry. It's not just 236 random people. That would be kind of useless. And right now, if you take a look at where mortgage rates are, they're in the high sixes currently. So you're talking about maybe a 1.25% to 1.33% decline that you'd be seeing over the course of this year.
Which is not way out of line with Fed expectations, or not Fed expectations, but CME futures on what the Fed is going to do, for example.
No, and so a couple things to look at here. The first is, okay, what does that mean? Let's back into where we'd have to be in order to get to this point. First, we look at the 10-year U.S. Treasury, which right now is about 4.1%. So if the 10-year stays there, at first glance, you might say, okay, that means that rates might not move down. But remember, we've talked about this before. Historically, The 30-year fixed-rate mortgage is about 1.7% above the 10-year U.S. Treasury, which means if it returned to that instead of being at 2.7% above as it is today, well, gee, just doing that, you get down to 5.8%.
Without much change in real interest rates. Yeah.
Correct. I don't know that you necessarily...
Sorry, I'm confusing terms, not real interest rates, with 10-year Treasury rates.
Yes. I don't know that you necessarily get all the way back there because I think banks are still a little bit wary of a potential inflation rebound, so maybe it comes down to like a 2.1% spread. And if that's the case, to get to 5.1, you got to get to a Fed, a 10-year Treasury of 3.4. That starts getting a little bit tougher to hold. So 5.5, a couple things. First, there's a lot of movement that has to happen to get there that I'm not sure you do. I think maybe somewhere around 6 feels more reasonable if inflation stays low. But the other piece here is, man, you get rates into the high 5s. You are going to have...
Lines out the door again. Mortgage
brokers are going to be throwing Christmas parties this year if you get rates back into the high 5. And like giant ones. It's like the amount of activity if you get rates back into the 5s. Woo-wee. It's going to be a little roasty. We'll take a quick break here. We got hour 2 coming up in just a bit.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, LegalExchangeShow.com. Once again, simply call 866-848-5699, or get it from their website at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing & Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Little bit after 11 here on the Financial Exchange. It's Chuck, Mike, and Tucker with you. And we've got the Dow down 28 points. The S&P is down 1 point. The NASDAQ up 16. So not really much movement today. Today's kind of the calm before the storm this week. As we discussed in hour one, just a whole bunch of economic data and earnings kicking off tomorrow. And so it's going to be awfully busy as we go through the next 4 days. But today, well, there's a Dallas Fed Manufacturing Index.
Woo!
And then Heartland Financial reports earnings.
Everything's bigger in Texas. Is Heartland Financial in Texas? They must be.
I don't know. Is Texas Heartland? I don't really. I thought Heartland was kind of more like just south of the Midwest, kind of Missouri and Oklahoma. They're Colorado.
Well, there goes that theory.
Where is the Heartland? Oh, no, that's a Canadian TV show called Heartland. Let's see. Heartland, United States. It's usually the Midwestern United States or the states that do not border the Atlantic and Pacific. This is defining the Midwest. There's no consensus regarding the geographical boundaries of America's heartland.
But probably not Texas.
But the American Midwest is most commonly cited. So places with corn and wheat.
Yeah, got it.
Is how I would define it. I'm going to plant some corn and wheat just so that I can feel like I got a little bit of heart. Nearly 25,000 tech workers laid off in the first weeks of 2024. Big deal or not, Mike? I mean, obviously, it's the people who got laid off. It's a big deal.
If you're one of the 25,000, then big deal. Quite frankly, we saw something at the end of 2022, beginning of 2023, that looked remarkably similar to this.
Yeah, I was nervous about this then.
And we were nervous about it, and it led to nothing. So that's not good enough to say, well, it won't lead to anything this time. It could. However, when you listen to the executives that talk about these layoffs, I don't hear a lot of, hey, we're pulling. Last year I heard a lot of, hey, we're pulling back in anticipation of whatever it might be, just disruption and problems in our market and funding drying up. This year I'm hearing a lot more of, we need to pivot our business towards next generation artificial intelligence or this, that, or the other. And that seems to be where I'm hearing more about these layoffs in that context rather than the pending doom scenario here. So, one, tech can be a canary in the coal mine for what's to come for other sectors of the economy. It didn't last year. Maybe it is this year. But by and large, I don't see a story of, hey, we're really worried about the future. It's more just we want to spend money where we think the growth is going to be, and that happens to be areas where we don't need the same employees.
Yeah, I think that's a fair way to look at it.
The other piece that I'll point out, which just runs directly contradictory to a piece that we were talking about earlier, which is they're quoted saying some smaller tech companies are running out of cash and facing fundraising struggles with the era of easy money now gone. And I will say that, the era of 2021 easy money is definitely gone. However, we just got done talking about a story how there's a lot of willingness to lend out there right now. Borrowing seems to be expanding both on the consumer and business side of things. And so maybe that's just different in the startup tech space. But I suspect that if that continues, you will see willingness to lend to that space as well. I don't think it's uniquely devoid of borrowing and lending.
Americans keep signing up for new phone plans. Who's driving the growth? Well, gosh, if there's one thing that I just really want to do every week when I get out of bed first thing Monday morning, it's, hey, let's go sign up for another phone line.
Yeah,
sounds fun.
Love switching. So this is an interesting one because I distinctly remember thinking about this. This goes way back, but before data plans were really a big piece of all this, before the smartphone, there were a lot of these types of articles of, hey, everyone's already got a phone. Where's the growth going to come from for these companies? And then, it turns out everybody needs massive data plans because we're going to basically carry a computer around in our pockets. Maybe we're on the cusp of something else like that that I'm just not thinking of. Maybe we're all going to be wearing goggles on our head that need to be connected to the internet at all times, like Meta and Apple want us to do, and I'm just missing the boat here. But yeah, it does seem to be that these companies are growing their users at a pretty rapid pace without massive population growth or anything along those lines. So a few things are being looked at here. One, kids just keep getting phones younger and younger, so those are adding to it perhaps. Companies are giving out phones to employees for work-related stuff, so that could be part of the growth as well, and that very well could continue if we have a strong labor market. But it does raise an interesting question, and some analysts calling the growth unsustainable.
Do you guys know how much data you use on a monthly basis?
I have no idea.
I don't track it anymore because we signed up for an unlimited plan.
I have an unlimited plan too, but I was curious because I always like to shop around.
Yeah.
Just because I'm grandfathered in at $30 a month by T-Mobile because when they bought Sprint, who I was with, as part of that agreement with the FTC, they had to agree to never raise my rate. Not just mine, but like anyone who was with Sprint at the time, they had to agree that they will literally never raise your rate. But I just keep poking around just because I'm like, okay, maybe there's something better out there. And I haven't really found anything yet. But in order to make, excuse me for a second, in order to make an accurate comparison, I need to know how much data I use. Because even when you look at a lot of competitors' plans that are unlimited,
they slow you down
after a certain amount. So a lot of them are like, hey, once you use 20 gigabytes of data, you're going to be slowed down. And I looked at mine, and for the last 4 months, because that's all that they tell me, the last 4 months I'm averaging about 6 gigabytes of data. So I'm nowhere near the threshold where it's a problem. But these are things that I do wonder about because from what I can tell, and again, I just have like myself on my plan, it seems to me that unless you're doing like a 4 or 5 line plan, you're still probably in like the $50 to $70 a month cost.
$52.
Yeah, and that seems to be in the low end of where you'd be otherwise. Is that fair?
I think so, yeah. I will say, by the way, that I absolutely use more data because I know I'm on an unlimited plan. I don't know how many times pop-ups come up like, hey, you sure you want to download this over wireless connection instead of internet? And I'm like, yeah, I don't care. I'm paying full boat here, so
I just find that I'm on Wi-Fi so often.
Yeah.
That
I forget that data is a thing.
I don't really. The only time that I'm not on Wi-Fi is when I'm in the car, or I guess if I'm like at someone's house that I don't have the Wi-Fi, and then I'm usually there to hang out with them and not sit on my phone.
You don't have one, Tucker. Do you have a smartwatch?
I don't. No, I don't intend to buy one.
I mean,
either.
the idea. I know they have smartwatches without a data connection and ones with. But that would be another area that I would imagine is seeing a fair bit of growth right now. If you are connecting all these other smart devices, I mean, granted, you don't need it for your fridge and your toilet, but for your smartwatch, for other wearable devices that might be coming, I would think that that's a growing trend line. Because I believe, again, I'm kind of the idiot here with a 15-year-old dumb watch, but if I had a smartwatch, I would think the idea is, hey, I don't need to carry my phone with me when I'm going for a run. I can connect my headphones to my watch, listen to music. You pay for a separate data plan for that device, and that could be meaningful growth, I guess.
I have absolutely no incentive to switch off of the original family plan that I was on when I was a teenager. I'm still on my family plan.
Oh, sure.
With my mom and my sister.
Yeah.
And my wife, too, with her respective family.
Yeah.
Like $52. Like, why would any of us switch? Doesn't make sense.
The other area that could start, I would be surprised if every car in the next few years, like, why wouldn't a lot of them start having data connections of their own and require payment for them?
Oh, great.
Oh, God. I really hope that's not where we're going.
Right? Like, I think it probably
is.
will. Like, I could see a compelling reason for my minivan to have a data connection so that all my kids can connect to the Wi-Fi in our car when we're on that long road trip. Like, don't love it, but that's where we're going. That's probably where we're going.
What's the compelling reason? Why can't you just do a Wi-Fi hotspot?
You can.
With your phone. Like,
Again,
so many plans include that now.
You can. But the same argument could be made for, like, every smart device in my home right now, and they all seem to be Wi-Fi connectable. So I just tend to think that that's the direction we're going to go.
Yeah.
Regardless of whether it makes sense.
By the way, just circling back to our conversation about the Heartland.
Oh, good. Good thing we're circling back to this. Yes. Go ahead.
Heartland Rock is a specific division of rock and roll, including singer-songwriters like Tom Petty, Bob Seger, Bruce Springsteen, and John Mellencamp. So there you go. I mean,
that's called Heartland Rock.
That's what Wikipedia tells me.
I hate John Mellencamp.
I mean, Bruce Springsteen's from Jersey. That's not the Heartland.
Yeah.
No.
Even though
Jersey rock and roll.
Well, no, that's Bon Jovi.
What did you say?
Bruce Springsteen.
Oh, I'm sorry.
I mean,
I heard Bon Jovi.
But I know you're going Bill Belichick with me on that. Yeah. And but Jersey, either of you know what the big vegetable that they used to produce was?
No.
Tomatoes. Jersey was the tomato capital of the United States.
There you have it.
Let's take a quick break here. When we come back, it's true.
Trivia.
They were.
Oh, good.
Nothing
good.
like a Jersey tomato,
right.
Tucker.
All right.
Let's take a quick break here. We got trivia, and then we're talking about the latest survey on financial independence in young adulthood from Pew.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled, Can You Afford to Snowbird? Mike, one of the biggest decisions to make on this front is, should someone look into buying a place somewhere south, or should they look into renting a place somewhere south?
I'll tell you, it's funny to me, but it's so ingrained in our culture that home ownership is the way to go. It's the way to build wealth. It's just what we've all been trained on. And There are a lot of those benefits, especially if you're a primary residence, but I frequently see mistakes on the choice of home ownership versus renting when talking about a secondary property. And so there's a number of key factors to ask yourself when you're thinking about going to that second property as to whether you should own or rent.
What kinds of things have to go into that decision?
Well, I mean, first and foremost, how confident are you that this is exactly where you want to be? Because when you factor in the transaction costs of real estate, they add up quickly. And so if you make the wrong decision and 3 years from now you're relocating, it's going to be very tough to recoup your costs on that front. But how long will you be spending during the winter months there? Are you going to be spending the winter months? You can get a great deal on renting if you're on off-season or shoulder seasons. And so that can make things much more appealing. And then just quite honestly, what sort of person are you? Are you going to want to deal with the maintenance on a property that you're only visiting 3 to 6 months a year?
Our guide this month is titled, Can You Afford to Snowbird? And there are 2 different ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can go to ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine-in only. Well, today is Tom Selleck's 79th birthday. Selleck has had a fantastic career in Hollywood, starting with his breakthrough role as Magnum P.I. During his run as Magnum P.I., Selleck was approached to star in a major movie directed by Steven Spielberg. Unfortunately, scheduling conflicts with Magnum P.I. didn't allow Selleck to accept the role. The role would instead go to Harrison Ford. Trivia question today, which hit movie was initially offered to Tom Selleck, but instead went to Harrison Ford? Once again, which hit movie was initially offered to Tom Selleck, but instead went to Harrison Ford? Be the 10th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, isn't it interesting how the word young adult can mean different things depending on the context that you're looking at? Like when you talk about young adult novels, you're talking about books for like 13-year-olds. But when you talk about young adults and their finances, you're talking about age 18 to 34.
I don't know that I'm going young adult for a 34-year-old.
Feels a little old, right? I would say 18 to 27.
Like, you're approaching middle age if you're 34.
Well, only if you live to 68.
What's the average life expectancy for a male in this country?
Well,
76?
Once you get to 34, it's like 82.
Yeah, okay.
Yeah, confirmed.
Yeah. Okay.
So there's that. So, in any case, I don't think 34 should be a young adult.
What's middle age?
35.
36. Anyways, Pew went out and surveyed. I'm sorry, every time I hear the name Pew Research Center, that's all I wanted. Hey, we got a question for you. Pew, pew, pew.
I think about Pepe.
What?
Pew?
Pepe.
Oh,
Yeah.
okay. Yeah.
Your favorite neighborhood skunk.
Yep.
Anyways, so they surveyed a bunch of young adults, as they define them, aged 18 to 34. 45% of them say that they are completely financially independent, but once you look at people in their early 30s, that rises to 67.
Okay.
44% of young adults say they received financial help from their parents in the last year. Top two areas were household expenses and their cell phone bill or subscriptions to streaming services. Streaming services, I really don't lump in that category.
Of financial help?
Yeah.
If you're
cell phone,
mooching
I
off
do.
your Netflix.
Well, because cell phone I do because it's a necessity. A streaming service is not a necessity. Like, that's something that, like, your parents are like, yeah, like, sure, like, hop on. I view that different.
Yeah.
A cell phone is something you
that's fair.
need. This is almost more like someone gets you a Netflix subscription. That's a gift.
Yeah, I think when we think of financial help from parents, like, immediately comes to mind is like, oh, somebody's parents are paying their rent. And that's not necessarily what this survey is indicating. It's saying some form of financial assistance. But, that's a large portion of 25 to 29-year-olds receiving some form of financial assistance or another, minimum being sharing of a streaming account.
Most young adults who live with parents say they contribute financially, including 65% who pay for household expenses such as groceries or utility bills, and 46% who say they contribute money towards the rent or mortgage. Other data that they have, most young adults, 66%, say their parents did a great deal or a fair amount to prepare them to be an independent adult. And let's see. Trying to think if there was anything else that was notable
I
in
found
here.
one. Among parents who say they helped their children financially in the past year, more than a third, 36% of them, say doing so hurt their personal financial situation at least some. And I would be willing to bet you that most of them have never had that conversation with their kids.
No. The areas where they actually broke down the help that was received, 28% said that they received help for household expenses, 25% said cell phone bill or subscriptions to streaming, 17% received help with rent or mortgage, 15% with medical expenses, and 11% with education. Anything stand out there?
No. Honestly, like that doesn't stand out. I don't know. As with many data that we cite on here that Pew or other sources put together, I don't have a great sense of what this looks like compared to previous generations.
No, I mean, look, I don't either. I can tell you, hey, when I graduated from college, until I was about 26, my parents helped me with a few things. Like, they had me on the cell phone plan. They had me on, I think, the auto insurance because it was cheaper that way. Like, I paid for the auto insurance and stuff like that, but I was looped in. And then at 26, I think it was, okay, like, you've been out for, like, a few years.
Health insurance, et cetera.
Go and have fun.
Yeah, I would be willing to bet that when college graduation rates were lower and housing costs were lower, that the percentage of individuals financially independent at that point in time was considerably higher than it is today. With what's the percentage of high school graduates that attend college? Probably 60+%.
Attend, I think, is like 80, and I think graduation is 60.
So you're kind of, I think, in many cases, pushing that financial independence out further than it was in the 60s or 70s when most people didn't go to college.
Yeah. Taking a look at markets, the Dow's off 16 points. The S&P is now up 1. The NASDAQ up 28. So just continuing to chop right around flat for the day. Not a whole lot of movement at the moment when we look at markets. Let's take a quick break here, but when we return, we have the trivia answer, and then we're talking 401k plan.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Trivia question today was, which hit movie was initially offered to Tom Selleck but instead went to Harrison Ford? That would be Raiders of the Lost Ark. Selleck was producer George Lucas's first choice to play Indiana Jones. Sadly for Selleck, his commitment to Magnum PI wouldn't allow him time to shoot for the movie. Raiders of the Lost Ark would go on to be the highest-grossing movie of 1981. Winner today of the Financial Exchange Show t-shirt was Kevin from Concord, New Hampshire. And Kevin's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Piece in the Wall Street Journal over the weekend. There's a new option in your 401k. Read this before you try it. What's the new option, Mike?
Managed accounts is the new option in some 401k plans. And sometimes it's being sold as more than just an option with features such as auto-enrolling you in a managed account. But here's the general idea behind it is 401ks, 403bs, whatever the retirement plan it is that you have, is in many cases a big portion of your retirement savings and your overall financial goals. And some are making the argument that it shouldn't just be left to an auto-enrolled target date fund, for example, because that just makes a bunch of assumptions about who you are, how long you're going to work, how long you're going to live, and builds a portfolio based on that. So they're touting the idea of, hey, these managed accounts within 401ks will open up the investment options to you and build more customized strategies. And I won't argue that theory entirely is based on a false premise, but here's the thing. If you're going to start charging somebody in their 401ks a bunch more money to have a managed account, then you need to actually, if you're the person being charged, then you need to actually put in the effort to give that information and get a bunch of information about what they're going to do. Because otherwise, they're just going to charge you fees to do the exact same thing that the target date fund is doing.
Yeah.
Right? Because there's an example that was given here of a 50-year-old in Alaska who was auto-enrolled in one of these things. Turned out he was paying, 0.45% a year for a managed account, plus 11 basis points in fund fees, a $35 a year administrative fee. And he just kind of didn't notice that he was auto-enrolled in this thing, never gave the manager any information about the fact that he had an IRA that was held elsewhere and was completely differently allocated. And so this manager apparently according to Dan McLean, put 22% of his balance in a money market fund and dramatically underperformed what this guy was hoping to do. And so what's the lesson here in your mind? I think there's one for me, which is there's been a lot of new things going on with 401ks over the last few years, right? Fidelity's been trying to roll out crypto in 401ks. Managed accounts and overlays have been becoming more popular within these retirement plans. And it's not to say that any of those things are definitively wrong, but if you're going to use them, you have to understand what they're there for, because if you just put them in there and don't really pay attention to it, you can oftentimes just pay additional costs for no good reason.
Yeah, and I think it speaks to the fact that with any service that you're trying to utilize as part of, whether it's a financial plan or retirement planning or whatever it is, you've got to be a participant too.
Sure.
It's like the relationship that you have with your doctor. If you don't see them for 5 years and then you go in and you're like, hey, how come you didn't help me with my back? They're going to be like, well, you didn't tell me there was a problem with your back, so that's why I didn't help you. You have to communicate with this person the same way that you do with a doctor in order to get the kind of care you need in that situation. It's the same thing for a financial plan, and asset allocation, or retirement planning.
So I think, there can be a lot of confusion in these, especially where I see it all over the place is the idea that selection is going to improve the success of the plan. I have a real problem with that. You see that in a lot of educators' retirement plans, for example. If you work for the state of New Hampshire and the school systems, you might have 15 different retirement plans to choose from, which I think is just too much choice and not enough guidance. And I would just be suspect of any new feature that is being offered in a retirement plan in general. That having been said, if you're approaching retirement and trying to figure out, hey, how does this fit into my overall picture, then that could be a reasonable reason to go do this. If you're the type of person that's never going to make any changes to your investments because you don't know what you're doing, another good reason. You just have to understand what you're getting. If you have questions about your specific retirement account, your specific retirement plan, how it works into your overall retirement strategy, what the costs are associated with it, the different options that are available in there, and how to best utilize them for your personal situation, folks at Armstrong Advisory Group would love to talk to you about it. We've got live human beings here to take your calls and talk to you about your specific situation. We offer free consultations throughout New England, and you can reach our offices by calling 800-393-4001. Once again, that phone number is 800-393-4001. You can also check out a lot of good information on our website, armstrongadvisory.com, and book a free consultation right there from the website. But again, 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
So Meta Platforms a couple of years ago changed its name to Meta Platforms after being known as Facebook for the better part of its then, I think, 16-year existence.
Okay.
And the idea was that they wanted to move more into this metaverse, which at the time was actually dumber than it is today, in that it was, like you can own real estate in the metaverse, which is still not real, so it's actually fake estate. Just, like to point that out. Or you can, go in and hang out with a bunch of, avatars without legs because we can't figure out how to code legs into the system, even though you got to buy a $1,000 headset in order to participate. Meta now saying, and this is according to the Wall Street Journal, that Meta is saying that they're welcoming a headset war with Apple. So even though Meta's Reality Labs division is less than 1% of overall revenue, I think what Meta is getting at here is, hey, anything that gets people interested in putting stuff on their face to be in the metaverse is a net positive for us, because right now we can't get people to put enough stuff on their face to go in the metaverse.
Yeah, I mean, I think there's a bit of a rising tide lifts all boats argument here that, hey, if we can get, quite frankly what it is if Apple can convince people to wear a headset, they're just such a, I've referred to them before as a fashion technology company, right? People buy the earbuds not because they are the best available earbuds in the world.
Sure.
They buy them because you have them in your ear and it's a status symbol to some extent. And so I think Meta's bet here is if Apple can convince people to wear a stupid thing on their eyes and go into that version of the metaverse, then we'll be able to peel off some of those that will also be interested in our metaverse. I don't know if that's true or not. I don't know that Apple's going to have any success in this either, but
has anyone else had a lot of success with smartwatches?
Let's see. So I don't know the segment like I do the cell phone segment where Apple makes up all the profitable growth there, but yes, there are popular Android-based smartwatches, I guess would be one answer to your question.
Because I haven't seen any of them.
Yeah,
I've never seen anyone wearing one.
Yeah, I've seen a few of them out there. I don't think,
Garmin.
So, Garmin's are out there. Samsung has a lot of smartwatches that are out there, and Google, again, has a Pixel watch that, sales have been okay.
What about AirPod competitors? Does anyone really play in that space where they're doing like $16 billion a year in revenue from headphones?
I just buy the cheapest ones that are available.
Yeah,
out there.
same with me. I go through like 3 of those a year because I sweat through them because I get sweaty ears when I run.
Yep.
It's a real problem.
Classic Chuck problem.
It's a real problem, let me tell you. Let's take a quick break here, and when we come back, we'll do a little bit of Stack Roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle Albert Warner served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father Victor and brother Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com to book your trip today. That's visitusvi.com.
Mike, what do you got for Stock Roulette?
We spend a fair amount of time on the show, sometimes criticizing corporations for, I think, poorly crafted messages or just, I think, bad management and HR policies on different things. And today, instead, I'm going to applaud one, the largest U.S. employer by the largest U.S. private employer, Walmart, has announced some changes to some of their compensation packages, including what they are doing for managers of their stores who are now going to be eligible for grants of up to $20,000 in company stock every year. There are a lot of other incentives in here, too. Apparently, I wasn't aware of this, but bonuses for store managers could reach up to 200% of base salary based on profitability of the store and other factors in there. But I think frequently you hear CEOs and executives talking about, hey, we need you to pull for this company. We need you to, think about the profitability of the business. We saw this from the Wayfair CEO just a few weeks ago, and my answer has been, great, that's good. You're right, but align the incentives so the employees actually care about that sort of thing. And, again, the store manager is a pretty big position here. You're talking about the average salary of $128,000 per Walmart store manager, so we're not talking about the $16 an hour person. But if you want to incentivize that, I think this is an excellent way to do so. And
I would agree.
Yeah, I'm just going to take a moment to not criticize Walmart for once.
Amazon now charging Prime members extra for ad-free streaming. I'll quote here. Andrew Scott Gray says he's perfectly happy paying $15 a month to get free shipping on all of his Amazon. But he draws the line at having to pay $3 more to watch the video streaming service without ads.
So don't.
Right?
Am I missing something?
Because
don't.
And
don't do it, Andrew. Is it Andrew?
Scott.
So he said,
Andrew Scott.
He said, yes, Andrew Scott Grace, which is 3 first names.
Yeah.
Red flag right there.
When Grace was notified last month that Prime Video would soon include commercials unless he paid extra, he immediately canceled his Prime subscription, forgoing the free shipping perk and vowing to stop shopping from Amazon altogether. So I did this 1 year. You guys remember the year after the pandemic, I said I'm not buying anything on Amazon.
I do.
And I did.
Successfully, yep.
I don't think I can do that with 2 kids now.
No chance.
No
chance.
Were I still,
You live out in the sticks now, too, so that's a factor.
Were I still kidless and, I could figure it out. I when you get 2 of them yelling at you and you just need to order the toilet paper, you order the toilet paper.
They're not even auto-renewing you in this. They're not even like auto-upping you in this. It'd be one thing. I would criticize Amazon a lot here if they said, hey, we're moving everyone from their basic membership to the ad-free membership, which is an extra $3 a month, and you can opt in instead for the ad support. But they're not changing anything other than to say, hey, if you want to watch ad-free stuff on
Where
Prime,
do I even find it?
I don't know, but I just went to my own membership, and I'm still sitting there at the same monthly price that I was before.
I am too. I'm looking at it,
change
trying to figure out what to do here, and I can't.
I haven't gotten
find the ad-free. I got an email about it.
I didn't
either. Maybe it's only on some of ours now. They're probably rolling it out gradually.
Maybe that's it.
I don't know. But I can't figure it out. But, yeah.
Again, not shocking. This is the same stuff that has happened with every streaming platform out there and every Amazon platform out there. Do you remember when Amazon Music used to be free without ads? Not anymore.
Actually don't.
It was. Yeah, up until like 5 years ago, it was basically Spotify. You could listen to any song you wanted, and then they said, oh, this is hugely unprofitable. Let's start shaking that up. So now, I don't even know. I'm sure there is a ad-free version of it, but it's ad-supported, and it's more like the non-paid version of Pandora, Spotify, where you can't actually select the song you want to listen to.
This raises another problem here, actually. There's, again, you go into Amazon, it says, click on, this Prime thing to manage your membership and view your settings and this and that. And I can't actually manage all the things that I'd want to manage in here.
Like what?
Like, you can't just... one of the things that I love about Apple, just as an example, if I ever have a show on HBO or Max or whatever they call it now that I want to watch, I just sign up through Apple because it's very easy to... you can find it easily. It lists all your subscriptions in one place, blah, blah, blah. It's great. This says, manage your Prime subscription all in one place. I can't see any of the stuff that I'm actually subscribed to through Amazon on this page. And I don't know where you would go to find it.
Yeah. What do you subscribe to through just Audible? Okay.
Audible, or you could also, you can do any of the premium movie channels through that as well, and you would expect them to show up here, but they don't.
Yeah.
Also, other things, just as long as I'm complaining about Amazon Prime Video.
Sure.
Did you know that even if you link a household together, so me and my wife have linked Amazon account. So,
Yes.
like, we have one Prime thing, but on Prime Video, we might have our own separate things.
Yes.
If she buys a movie on her Prime, and I go onto a streaming device in my house where I am set as the primary person, I cannot watch what she bought.
Oh, wow.
I have to switch the login and log in as her to be able to do so, even though we're householded together and should be able... Like, I can even go to her thing on my, like, other device, but I can't watch the stuff that she bought. Which means that I bought one of the Mission Impossible movies twice by mistake.
That
All
leads
according
me
to their plan.
to another question. So I've purchased, I don't know, hundreds of books that I've listened to now through Audible.
Yeah.
Humble brag.
Not really.
Well,
I mean,
no,
I
he can't
I
read.
can't read
He
books,
can't
so I have to
read,
listen
so-
to
I
them.
listen to books.
What is this, a book for ants?
Can I give that book to somebody else?
I don't know. This is why I buy
I
physical
would
books.
think so,
Because,
right?
like, I can just hand it to you.
Yeah. I'm going to look into this.
Give an audiobook to someone?
Right. I've listened to it. I have no use for it anymore. I bought it. Why can't I give it
What's
to
it
somebody else?
Is it just an MP3? Is that how it works?
I mean, today, not even, because it's just linked into my Amazon account. I can re-download the thing and listen to it again if I want, but otherwise, yeah, it's...
If
I
you've
guess
already
it's downloaded as an MP3.
downloaded it, then you should be able to just share it.
No.
Okay.
No, it's not downloaded in that
Oh,
fashion.
then no. The answer is probably no.
Should be able to.
This is why I believe in real books.
Yeah.
Now you can borrow a book.
Gotta learn how to read, finally. Ugh.
No.
Mess.
I before E except after C. Just remember that and you'll be in pretty good shape. Taking a look at markets here as we head towards the top of the hour. Still not much going on. The Dow's positive now, so we got all three major U.S. indices in positive territory. The Dow is up 11 points. S&P is up 6. NASDAQ up 49. So a little bit of mild upward drift, but again, the real meat is going to be coming in the next 4 days here as we get into a bunch of economic data and earnings over the remainder of the week. We're going to take a break for the rest of the day now.
22 hours.
Yeah, just the rest of the day. It's fine. We'll be back tomorrow. We're not going anywhere. And actually, I'll probably go home and sleep at some point, but don't sleep in the studio. That would be too much.
No, don't do that.
That'd be bad. So
You're in my bedroom.
We'll sleep somewhere else, and then we'll be back here tomorrow on the Financial Exchange.